Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of Brent crude oil, spot gold and Bitcoin. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or on any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, ICE Brent crude oil futures. A second bullish white soldier on Friday, but this chart not only doesn't tell what is going on now, as last Friday was a different country. Instead, I will shortly look at my longer term monthly charts to get a better perspective. But first, a quick look at what today has done so far. So far today, gapping higher open, indeed a second consecutive gapping higher weekend. Prices opened well above a free area between the October 23 high at 93.79 and the 2022 to 23 based congestion between 97.68 to 99.61. In fact, the market opened right on that November 22 high at 99.61 before a short ammunition gathering period a little lower down before racing higher. Through the 2014 based congestion between 101.51 to 103.34, containing the bright red neckline extension of the March to April 24 head and shoulders top, currently at 102.84, through a wider yet more sparse congestion between 105.49 to 108.62, then through a small congestion at 110.68 before punching through the dark blue neckline extension, currently 113.51 of the July to November 23 head and shoulders top, through a late 2013 to 2014 congestion between 115.70 to 117.31, to finally halt at a small congestion between 119.19 to 119.99, made up from the 2017 high and the May 2012 high respectively, where it has so far peaked. Above this we have congestion at the April 2012 high at 125.96 and the 2012 high itself at 128.43. The market has since dropped down to the August 22 high at 105.49, the bottom bit of the congestion between 105.49 to 108.62, and above a free area which we've sort of started to enter now, and that's before a congestion between 101.55 to 103.34. You will note that over the weekend I drew two targets, target X at 97.05, this is before the market opened yesterday, or last night I should say, and target X1 at 104.08. Please remember these targets, 97.05 and 104.08, as my longer term monthly chart can explain these. So if we go there, here on my monthly chart, which I'd earlier explained in my annual Brent crude oil video commentary back in January this year, you can see what are now three former patterns with targets X through to X3 below the market. These targets are no longer valid and will be retired after this commentary. The patterns creating these targets will also be retired, and they are a September 23 to April 24 bearish shift pitchfork, a 23 to 24 based bearish cat's ears pattern, and a large 23 to 25 based descending triangle. What the activity over April 25 today has given us instead is a double bottom pattern, a very valid pattern, and this gave us the previously mentioned targets on the daily chart, which I spoke about earlier, a primary target of 97.05 and a secondary target X1 at 104.08. Needless to say, these targets have already been achieved. So what can we see new here? Well, we have the 50% Fibonacci line of the 22 to 25 move at 98.80, just below the market, relative terms, which looks significant at the moment. Perhaps more significant is the newly drawn bright red bullish shift pitchfork for the 2020 to 25 move, as the bright red middle time, which is currently at 119.32, has effectively capped the market today. A very instructive and interesting situation. Beyond this bright red middle time, we have the continuing congestion created back in 2010 through to 2014, between about 100 to 120, with some extensions beyond, and even a little bit below. Notably the highs in mid-22 at 125.19 and 125.28. These will now become very significant, as beyond these we have limited resistance from the 2011 and 2012 highs at 127.02 and 128.40 respectively, before we hit the all-time high at 139.13. The question this all now brings is, should prices punch up through the bright red middle time with strong consecutive closes, will we then challenge the all-time high, and will we then create either a double top, a huge double top, or will we instead, the whole action from 2020 to 2022 to date, will this now create a super large bullish halfway hesitation with targets well beyond the current all-time high? Spot gold. A counter to the counter, bullish closing white mirror bars on Friday after the previous session's immediate countering bearish engulfing pattern, thus exhibiting further intraday indecision in this market. We still have the bright red February based ascending triangle pattern, along with its topside targets of a primary target X at 54.40 and target X1, the secondary harder to reach target at 55.80. But if we do not see some constructive movement towards these soon, then I will retire them. Additionally, I have finessed the dark blue late December 25 to early February 26 bullish Andrews pitchfork into a shallower dark blue bullish shift pitchfork for the same move, as this was a more valid pattern in showing the milder bullish angle of attack of this market. The market is right now just below the dark blue middle time, which is currently at 51.50. Looking below, we have the key 50% Fibonacci line for the whole late January action at 49.99. What's above? Well, not much until the old 100% projected Fibonacci line at 54.48, and I'm not even sure that's that good, and I might even retire it, I think, at some point. However, I noticed last week that the action since early February is akin to a small bull channel, currently 50.78 to 54.82, which I've highlighted in bright green. I did begin to wonder if this pattern might be taking over or maybe just complementing the ascending triangle pattern. Today, I am not so sure. As so far today, a higher open, but then back down, all the way down to just above that key 50% Fibonacci line at 49.99 before pulling back up. All this is set up today to be a possible key reversal, daily key reversal, and daily bearish engulfing pattern. Thus, if we close today either above 51.70 or below 50.70, then would be on. Additionally, if we close below 50.77, then we would have a bearish engulfing pattern. Any close in between 50.77 to 51.70 and would have a lesser outside day pattern instead of a key reversal. Right now we are just about looking at an outside day pattern. Bitcoin. A fourth bearish black crow as the market continues to spin around the interesting key bright red neckline extension, currently at 67.723 of the August 21 to January 22 head and shoulders top pattern. There is congestion all around, notably below from the 50% absolute Fibonacci line at 63.129 and above from the 50% Fibonacci line of the November 22 to October 25 move at 70.929 and the congestion between 77.779 and 74.444 made up of the March 24 high and the April 25 low respectively. Perhaps the most immediate interesting feature is now the descending bright green upper time, currently at 77.23 of the potential showrunner for the recent moves, the bright green early October 25 to mid-January 26 bearish Andrews pitchfork. We'll know if this is a true resistance, likely towards the end of this week, when prices cross down through the green upper trend crosses down through where the market currently resides. I'm of course prepared to finesse this bearish Andrews pitchfork into a shallower bearish shift pitchfork for the same period, should this be required. Now, in the bigger picture, we still have, just about hanging on, a very large October 25 to date bearish halfway hesitation in progress. The primary and secondary targets for this pattern have already been achieved, leaving just the much harder to reach tertiary target X2 down in the 54,000 zone. I'm starting to have some serious doubts as to whether we will reach X2 anytime soon, and I'm considering retiring it. But a key factor in this will be if the whole 2026 today action, if it will also become a bearish halfway hesitation or a potential basing action. So far on this, the picture is unclear, but I suspect the dark blue February today uptrend, currently at 64,275, will likely play a key part in it. Now, so far today, a reactionary bullish opening white Mariposa moving back up to the bright red neckline, and again, neither adding nor subtracting from the big picture in any way right now. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.